For everybody to join. So hello, my name is Mario Palladini. I'm your finance host from Berlin, and we are super excited to go on a topic about how to inflation-proof your portfolio, on topics on value investing, what are the right stock to invest, how Olga algorithm is helping you with apps as well, and some tips and tricks how to make that happen. So thanks for waiting for that. We're having a hybrid event. As you can see here, we have the honor to have with Marco Ahr as an investor, advisor, and experienced trader with many years on the road. So I think he will be the right person as well to go take us through the whole presentation. And then you have 15 minutes and we have a conversation. Then 15 minutes is going to be Q&A. Please remember to introduce yourself on the chat. Where are you from today? And also, please, if you have any questions, we're going to go on the Q&A. I'll be collecting the questions and then we're going to share it in the second part. So without any further ado, Marco, why don't we just start telling people a little bit about are value stock good for investment, for inflation? Can you let us inspire us on the topic to start a kickoff?
Yes. Thank you for the introduction, Mario. Welcome, everybody. I'm really nervous because it's my first Zoom call. Yeah, you don't believe it, but it's true. Yeah, so don't be evil with me if I make some mistake. My English is also improving, but I think you will understand me well. Yes, value investing. I think it's very important at these times because inflation is rising, and it's not transitory, like the Federal Reserve people said. So the question is what to do with our money to save it from the inflation. So first of all, I want to say a little bit about what is value investing. So value investing is to buy stocks that trading for less than the intrinsic value or book value. And well-known investors are Warren Buffett or Z.A. Klarman or Joel Greenblatt, for example, who is well-known for his magic formula. So our formula is also magic, a little bit more details than his very easy formula. I will tell you something about this later. And the mental model of value investing circles around three questions. So the first question is how to recognize companies with a sustainable, sustainable competitive advantage. And the second one is how to evaluate them. And the third one is when to buy such companies. And let's go to the search for these companies. And an exceptional company is the companies who have an advantage or a kind of advantage that leads to a monopoly-like situation. A good example for that is a company like Visa or MasterCard or PayPal, for example, and also companies who sell a lot of products like Walmart or Amazon have an sustainable advantage. And the next question is how to evaluate them. And therefore, you have some KPIs like gross margins, consistent net earnings, consistent growth in net earnings, not so much debt, for example. And the next question, the third last question, to take a short about this is when to buy it. And that's also simple in theory, but not so simple in practice. So intrinsic value, when is a company below its intrinsic value? Intrinsic value is defined very simple. It's the amount of cash that you can take out of a company during its remaining life. So you don't need this money for investment, for research and development, for expenses like selling, general administration, and so on. You can take it out. It's free cash flow. Mm-hmm. So that is the most important factor. And if you find companies who have products like Coca-Cola, steady products, you don't need a lot of research and development. And that's why companies like Coca-Cola, McDonald's, Procter & Gamble earn more and more money. So this was a short overview about
so that will be
investing.
one method. Intrinsic value will be one method of valuing stocks.
Yes, genau. And one other, or the last important thing is when to buy is you look at KPIs like earnings growth, earnings per share, and so on. And when you have a margin of safety, then you can buy. That means the stock is going down, but for example, earnings per share is rising. So now we see on the stock market, stocks are going down, and if you find some shares where earnings per share are rising, so maybe it's a good moment to buy.
Okay.
Yeah. Okay. Next point, Mario said.
So basically, another question is like, you mentioned a method to analyze, but you have a lot of stock to analyze.
Yes.
Maybe it could be what algorithm can be used, or what can you use actually to analyze many stocks at the same time?
Yes, as I explained, in stock analyzing, we have a lot of key performance indicators like gross margin, book value, earnings per share growth, and so on. And an algorithm can be very useful because you can save a lot of time with it, and you can compare whole industry if you have the right algorithms behind. It makes it easy for an investor with not so much money to choose good companies with good performance indicators. And we together, we find a solution to put nearly 20 KPIs in an algorithm, and we get a rank which shows us which companies are cheap in a theory of value investing.
Intrinsic value.
Genau, intrinsic value, and shows us, okay, in this branch or in this industry, software sector, for example, Microsoft or Adobe are at the moment the most cheapest or the cheapest stocks. So you can buy, and if the ranking is changing, maybe you can trade to another company. But on the long run, it's also very important that the management is very good, and also the market is a healthy growing market. So that's only the beginning for our algorithm. So it means in the future, we will add more points, like is the management good? Is the trend right? Yeah, the right growth in these branches, or is it a branch who is shrinking, for example? So then you have to go out. So that means not only algorithm will works, who is looking for KPIs like gross margin, net earnings, book value, and so on. Also, the industry and the forecasts are very important. But this will be our next step.
Sentiment, content, social media, a tweet can impact the value of the stock as well.
Step for us. So we need some more capacity and computer power.
Quantum computer, maybe is not the right.
Maybe.
Talking about like what are the things that impact the value of stocks? I mean, we see here about interest rates.
Yes, at the moment we see rising interest rates from a low level. I think in the summer the 10 years treasury yield were at 1%. 10 years treasury yield in the US market are the main rates everybody looks on, because it's the long-term rates, and these are very important for all measures in finance industry, for credit. And if the credit rates are going up, it means companies have to pay more for credits. Of course, that minimize your net income. That's a big problem for you, for investor, because you want to have a growing net income or earnings per share. And but there are also some branches industry who doing better when the interest going up. For example, banks.
Okay.
Banks like banks like high interest because they earn more when the interest going up. But there are also companies, for example, Reits, or companies with a lot of debt. They have big problems maybe if the rates going up. So at the moment, the big question on the stock market is, are the inflation transitory, or is it a long-term period of growing inflation? Nobody can say more at the moment,
Mhm.
only that the high inflation rates are higher than anticipated in the summer. Yeah,
Mhm.
Jerome Powell, the chief of the Federal Reserve Bank, said it's transitory.
Mhm.
So we have to wait. When the inflation stays high,
Okay.
then the wages will follow, and maybe then we got a problem. So then we can go back to history and look what was in history. So very good example is 1970s and 1980s, when we have 3 oil price crisis.
Mhm.
So we had inflation rates nearly 10-12%. And the best investment there was gold.
Gold. Okay. Here we have another example of an asset that can help us inflation proof our portfolio. Can you maybe in the last 2 minutes go through what other asset that can help us inflation proof?
Of course. Also, if you want to have inflation proof portfolio, the most important is you have only to invest in stocks who has pricing power. Yeah, you have strong labels like LVMH with its Luxus products, or Coca-Cola or Procter & Gamble, and also who has a good balance sheet, not so much debt, because debt's a problem when interest rates go up. It means you have to pay more
for
interest, as it minimize your net income. Yeah, your EBT, earnings before tax, and that minimize your valuation, of course. Yeah, because the easiest valuation is PE ratio.
Yeah,
everybody knows.
Yeah,
yeah, and depends on your net earnings.
You mentioned also REITs, so
REITs,
that will be real estate stocks.
That's very difficult because some REITs, like Evergrande, has some big problems
China,
now.
yeah. No, mention that one.
Everybody read about that, I think so. And REITs are, or real estates are good against inflation, of course, but REITs have also a lot of debt. So it depends on the value of the REIT or of the real estate. If it's a good estate, or if the company has good estate, they will have less problems than a company who have maybe real estates in B or C areas.
Okay.
So you have to look in the annual reports. But therefore, we have our algorithm, of course, so who make this evaluation to save you some time. Yeah.
You mentioned I'll kick off the first question and start looking to the audience now and start collecting the questions. I see people start writing. Thanks, Harry, for sharing. I'll be in a minute with the question. So the last question from my side, you mentioned gold. Oh, I also mentioned, what about crypto? It's really an inflation-proof asset.
Yes, at the moment, of course, it's very inflation-proof. Yes. But you are more expert in
very volatile, I guess.
Very volatile at the moment. We have some regulation risk I see coming to us. From Chinese side, we got already a lot of regulations. So they forbidden, I think, most of crypto businesses in China. And we also saw in the US some incentives to regulate them. But we also see a new geopolitical situation in the world. So nobody knows what will happen between US and China. We have the questions in Taiwan and so on. So that could be that gold and also Bitcoin could be a good asset in this period of inflation, and also in this period of what is it?
Uncertainty, I guess.
Uncertainty.
Yeah, exactly.
Yes, it was this.
All right, let's start with the question. Thanks, Marco, for the quick introductions. Very good English, by the way. People are saying very good English. I know you're more into stock and investment and public presentations, but we appreciate the time you spend with us. So let's start with the questions. We have questions here from Anne. Besides real estate, what are some other examples of physical asset to invest into counter inflation?
Of course, commodities.
Commodities. Natural gas, I heard last week's was very good.
Natural gas, of course, yeah. Maybe somebody read news from UK. They have some big problems with the gas distribution there because the gas speicher, the
Reserves.
yeah, in the summer were very low, and now the gas prices, I think, doubled since the lows in the last year. And gas also has advantages, the fossil fuel with the lowest carbon output. So on long run, maybe gas is safe, and also it's maybe possible to use the gas infrastructure for hydrogen.
Hydrogen.
Yes.
Okay.
And if you read a little bit about the hydrogen backbone, maybe that's a very cheap asset at the moment. Also, with a chance to get used when we have a hydrogen backbone in Europe.
Exactly. I was watching that. I watched the backbone for Europe because I was in the launch in Barcelona, the first hydrogen car.
Yeah.
So indeed it's coming. It's a reality. And I believe it's more efficient than EV, no? Electric.
That's another question.
Yeah, I'll keep it on another topic. I think we're
gonna physics.
Exactly. So let me follow the questions from the audience as well. So Ed Little, we have, should we be selling some of the stocks that don't meet the criteria, then hedging with some gold, silver, crypto, value stock, etc.?
I am a long-term investor, so I only look on the demand and on the supply. And when you look at gold, for example, at the moment we have some demand problems in countries like China and India because they have a little bit more problems with Corona than the Western countries. And I think hedging is a possibility, but you have to be an active trader. If you want to sleep well, you have to look on the long-term demand and supply. And I think at the moment it's balanced, but in the future, the gold system, I think, will win more power because Chinese want to uncouple from the dollar systems. So, but it's a geopolitical strategy behind it. And the best thing is to look on demand and supply. Yeah.
It's like crypto, they don't allow in transaction in China because maybe they're coming with their own cryptocurrency.
They will come. They will come. I read about it. Also, the EU come with its own euro. I think in 2025 they want to finish euro, or crypto euro.
Maybe that could be also another.
That's a problem that the governments don't want to lose power or control about money policy. So, but they can control the internet. So it's not easy, but it's a interesting technology behind, and it's called blockchain. And I think there will be a lot of use cases where we can improve our growth with blockchain. For example, when you buy something in China or in Africa, you can control the whole supply chain, for example. There are a lot of use cases. Also, big companies like IBM and Microsoft also work on this. And it's very interesting also for the future, for the internet to maybe decentralize the internet. The moment we have a very centralized internet with complications, and it's good for Facebook, Google, and so on. They earn a lot of money, but there are also a lot of people against these centralized systems. So it's interesting technology behind.
I think we can align with the next question from Peter Pogratsava that exactly talk about us. Is what about tech shares? Have they values past their peaks?
I don't think so, because when you look in technology, you see a fast growing semiconductor industry. And the power from semiconductors going up or double every 2 years. Moore's law, everybody know, or most of the people know Moore's law. Moore's law, the founder, Gordon Moore from Intel, said every 2 years the power is increasing. At the moment, we see some reflection points. So the best manufacturer is Taiwan Semiconductor until they produce at 3 or 2 nanometers at the moment. And now we get a physical problem because we're coming into the quantum supremacy and the problems with quantum computing, or the big chance of quantum computing. So I think the story for tech stocks is not over. Also, the big tech stocks are not so cheap like in the 2000s when we have the big bubble, when stocks are trading for 100, 150 PE ratio, something like that. If you look at Microsoft, Facebook, Google, they trade around 30, 25, 35 maybe, But you must always compare with the interest rates. The interest rates are very low, and I don't think interest rates can go up so much so fast, because then the states get a problem to sail back their big debt burdens. So I hope it's transitory with the inflation.
All right.
And
let's go to the next one. If we consider the below broad classification for growth and inflation, where are we currently and where are we heading? What type of company should we in these broad 4 categories? Number 1, high growth, high inflation. Number 2, high growth, low inflation. Number 3, low growth, high inflation. And number 4, low growth, low inflation. So where are we today? Where are we heading?
Yeah, that's a big question.
Thanks, Harry. Yeah,
I think the inflation is transitory at the moment, and depends on the wages in the next year. If the wages are going up and we go to a wage or inflation wage spiral, then we got problems. But at the moment, I don't think so. We will see higher inflations than in the last 10 years. That is for sure, because the last 10 years we had inflation rates, official inflation rates, we must say, from 1.5% to 2%. Yeah, but if you look at the feeling inflation, this is much higher. I live in Berlin, so okay, Berlin is very cheap also, but the rents for flats raise about 7% in the last 10 years. So that means the rents for flat doubled. So the inflation rate has some problems, because if you have a technology advantage in your iPhone, for example, then this lowers the inflation rate. So you have also look what are your what do you pay for your money? Rent, food, and these things going up more than 2% in the last 10 years. But you also have some things who lower your rate. It's difficult to say. I think we will have in the next 10 years a good stock market, because on the long run, value investors look for the power of the consumers, the consumer power. And this looks good for the next 10 years, because America, for example, is relatively young people there. Most of them are between 30 and 40 years, 35 years. And that's good for the whole economy. And China has some problems beginning in the 2030s, because they have this one-child policy. And I think then in 10 years, 15 years, they will get problems with the rates of growing economy. But I think till there, stocks very good.
Good chances.
But we have higher inflation. That is true. That will be.
So high stock, high inflation.
Yeah.
So I think higher, not higher.
Yeah, I think we will not see the same times like in the 1970s and 80s. Yeah, where we have 10-15% inflation per year and rates about 10%.
Yeah. I think we can connect with the next question. Is assuming you have a globally focused portfolio, which countries are you most excited about investing and in the next 5-10 years, and why?
I can speak from my own. I invested 80% in the US market at the moment, and now I will invest more in China, because China is at the moment, from a valuation perspective, very cheap. Yeah, if you look at Alibaba, Tencent, or other big companies, the value is under 20 PE ratio. So that means with the growing rates about 20-30%. You get a very, very cheap stock, or very, very cheap stocks, but you have the political risk there, of course. But you have also to consider the geostrategic side. And I think Europe is very old, not only old in thinking, also the peoples are very old. So we don't see so much innovation in Europe. Europe is good for consumer companies, or luxury companies. We are the leaders, FMH, Hermes, or Prada, and so on. I think with these companies on a good price, fair price, you can't make mistakes. The big question will be what will happen between US and China. Who will win? At the moment, we see a decoupling from the Chinese government. It's not so much the regulation. Regulation was always there. But I think the main things behind it is to decouple the stock market from the US side. Yeah,
that's what they want to achieve. No?
They want to have their own stock market, their own finance, and the last years, all big companies went to the New York Stock Exchange and said, "Here, hello, here are my stocks. Please buy. Give me some US dollars." But these times are over.
Perfect. I think we have plenty of more questions. I think we're running out of time. We have 1 minute left. Maybe we can ask, maybe it's a quick answer. How the higher inflation is likely to affect the oil price short to medium term?
I think in short term, oil prices will be high, of course. Also, after the Corona crisis, we see a lot of demand there. But on the long run, I think the best commodity is electrification, also electric utilities and so on, because the electric power utilization will growing, I think 2-3 times from now.
We'll keep it like that. We'll leave it
Also, hydrogen is electric. Okay. It's only you have to energy change electricity from renewables to hydrogen to save this energy for moments when you have lower renewables, for example. So I think go into
energy is a good idea.
Utilities.
So Mark, I mean, they're also asking what are your favorite value stock at the moment that algorithm is telling you. I think we keep it then. You can follow Mark or myself. We're going to share a link where you can get into the waiting list. It's not public yet, but yeah, happy to join us and be the first one to get access. So Marco, again, thanks so much for sharing your knowledge, impressive English, impressive knowledge.